Federal Reserve. Federal Reserve. Fed's Harker asks for action on inflation, estimates 3 or 4 rate rises probable this year. Philadelphia Fed President Patrick Harker said Thursday he expects 3 or 4 interest rate rises this year as probable to battle inflation. The policy tightening would be in reaction to inflation that is running at the highest level in almost 40 years. While Harker voiced support for rises and the conclusion of monthly asset purchases, he prefers waiting before lowering the Federal Reserve's $8.8 trillion balance sheet. Philadelphia Fed President Patrick Harker said Thursday he foresees 3 or 4 interest rate rises this year as probable to battle inflation. His opinion, expressed in a live interview on CNBC's Closing Bell, is similar with forecasts the governing Federal Open Market Committee provided in December. But although policymakers initially penciled in the possibility of 3/4 percentage point rises in 2022 of the Federal Reserve's benchmark overnight borrowing rate, Harker suggested he may be open to even more. "We certainly need to take action on inflation. It is more persistent than we imagined a while ago. I've been off the transitory team for a while now," he added, referring the phrase Fed policymakers used to define inflation through most of 2021 before shifting at the end of the year. "I believe it's appropriate to take action this year," Harker added. "I believe it's appropriate to take action this year." Harker's views came after Labor Department figures showed inflation soaring across the U.S. economy. Consumer price inflation is at 7%, its highest year-over-year pace since June 1982, while wholesale prices in 2021 climbed 9.7%, the greatest jump in statistics dating back to 2010. Following the December meeting, the Federal Open Market Committee devised a timeline that also would finish up the monthly bond purchases by around March. Minutes published afterwards indicated that some members also thought the Fed should start lowering the size of its balance sheet, possibly by allowing some of its bond revenues to roll off each month. Stock recommendations and investment trends from CNBC Pro. Goldman Sachs has a slew of new buy-rated companies, and believes 5 have upside of more than 90%. Hedge fund manager believes ARK ETF equities are a possible time bomb. Morgan Stanley estimates time spent in automobiles will climb by 25% by 2030, and these companies would benefit. But Harker prefers a gentler approach on the balance sheet matter. He believes the Fed should wait until it increases rates for sake of argument 100 basis points, or 4 rises, before beginning to pull down what has become a more than $8.8 trillion balance sheet as the consequence of asset purchases during the epidemic. A basis point is 1/100th of a percentage point. "I don't want to do it all at once. I believe that's absolutely the wrong way to go," he remarked. "Let's do them in stages." Going gradually, he argued, would buffer the economy from shocks that could emerge from the Fed coming down from the lightest monetary policy in its history. He said the Fed can avoid damaging the economy if it works carefully and deliberately. "This is why I am not in the camp of hiking rates and implementing balance sheet adjustment at the same time," he added. Earlier in the day, Chicago Fed President Charles Evans similarly indicated he views 3 rate rises as most probable, but he, too, is open to more. 3 hikes are certainly a reasonable starting bid this year depending on how the data roll out, Evans remarked to reporters. It may be 4 if the numbers don't improve rapidly enough on inflation. Neither Evans nor Harker are voting this year on the FOMC, but they do get to express their thoughts at policy meetings, and their views are part of the committee's dot plot showing members' interest rate expectations.